Hi, I'm Dawn McAlpine with Coldwell Banker West. As a real estate professional, the questions I hear most often are how's the market, what's my home worth, and recently, how do I time this market? During this pandemic, people are wondering how the unemployment rate will affect the housing market, especially with many families taking advantage of forbearance programs through their mortgage companies. The concern is that we will see another 2008 housing meltdown. This is not likely to happen, according to Black Knight. What is more likely to happen is homeowners who are behind on their payments will probably sell their homes and take out their equity before allowing the property to go into foreclosure. The high level of equity provides options for homeowners, policymakers, mortgage investors, and servicers in helping to avoid downstream foreclosure activity and default-related losses. The reasons for buying or selling a home remain the same, and there is pent-up desire to purchase. Whether it's millennials finally able to buy their first home, families having outgrown their current living situation, or families who've been living in urban areas such as downtown areas now want more space. With the entire family home, working from home, schooling from home, etc., there's a greater need for everyone to have their own space to get their work done without interruption. The problem is that homeowners are afraid they won't be able to sell, and so they are reluctant to enter the market. 87% of home sellers are concerned their home won't sell because of the pandemic and the resulting economic recession. But 372,000 homes did sell last month alone in the U.S. Looking at this next slide of the housing market recovery, the market hit its bottom and started to improve at the end of April and the first part of May. The recovery index is based on 4 factors: demand for housing, supply of housing, price of housing, and time on market. Zillow's July 2nd report shows month over month since the beginning of the pandemic, homes that have gone pending and new listings are up. However, year over year, there is still a lack of inventory, showing up as fewer listings. Here's another chart to help you visualize what's happening in the market. The yellow or orange line shows the total new listings from early March through the end of June is dramatically less than the same time last year. The green line shows new listings. So if you've been thinking about selling your home, moving up into a larger home, or downsizing to a smaller home, the market is ready, willing, and eager to buy it. According to Rubila Faruqi, an economist at High Frequency Economics, the housing market is likely benefiting from low mortgage rates, stronger demand for larger spaces, as more people are working from home, and a desire to move away from crowded cities to avoid exposure to the coronavirus. Whereas in the last decade or so, the tiny home movement has been all the rage. Since COVID-19, with families trying to work and go to school from home, they're finding they need more space, not less. A recent Realtor magazine survey found nearly 30% of respondents living in a high-density urban area say that the pandemic is prompting them to want to move by the end of this year. This is more than double the rate of those living in rural parts of the country, where residents are much more likely to stay put rather than to relocate. And again, according to Zillow, since the pandemic has altered what buyers value in their homes, builders are predicting how future homes will change as a result and what people will want most moving forward. As people spend more time at home during the pandemic, buyers are realizing which features of their homes are working and not working. Home builders predict open concept floor plans will be a thing of the past as people now value more walls, doors, and overall privacy. New construction, which offers the chance to personalize home features, saw its listing page views grow by 73% over last May. I know this market update has been intense with data and surveys, but when making a decision as important as purchasing or selling a home, I believe you're best served by knowing the facts about the current market, not just the drama from the evening news. On a more local note, buyers and sellers have found themselves in a real estate market that is unprecedented. The lack of inventory has led to bidding wars on the nicest homes. Remember, location, condition, and the price of a home determines the demand for it. If your home is in good condition, in a good location, and is priced properly in the market, it will sell, and it will sell quickly, often leading to a bidding war because there are more buyers in the market trying to buy a home than there are homeowners wanting to sell. In June, Alpine saw 24 new listings, 23 went pending, and 11 sold. The median sales price was $730,000 and spent an average of 34 days on the market. Inventory is at a 1.6 months. A neutral market, remember, is 6 months of inventory. El Cajon, combining 2 zip codes, there were 46 new listings, 47 went pending, and 24 sold. The median sales price for June was $664,500. They spent an average of 22 days on market. Inventory in El Cajon is 0.8 months. Combining 2 zip codes in La Mesa, in June we saw 36 new listings, 33 go pending, and 32 sold. The median sales price was $672,250 and spent 24 days on market. Inventory is 8.5 months. As always, my goal is to help you and your family reach your real estate goals and build generational wealth through real estate. If you are thinking about buying or selling a home in San Diego County, please give me a call. I'd be honored to help. Thanks for watching. Make it a great day.